Good morning. Welcome to Stock Market Today. It's Monday, August 3rd, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the great content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So I hope everybody had a great weekend. Let's dive into August. Let's dive into the new week as we get back to it. So U.S. equities were mostly higher in Friday's trading, finishing near the best levels of the day on the back of those strong post-earnings trading in Apple, Amazon, and Facebook. Google had a great print, but the stock traded lower. Tech, discretionary, and comm services led the charge, while energy and healthcare lagged. Treasuries were unchanged on the day. The dollar was up. I haven't been able to say that in a while. Against the yen and the euro. The index did post its biggest monthly decline in a decade. Gold finished up 1% at another record settlement price. WTI crude closed up 90 basis points. As we get to the desk this morning, it's futures are up slightly, about 10 basis points after that move on Friday. Asian equities were mixed overnight. Japan and China outperforming. Hong Kong lagged. European equities are rallying this morning. Treasuries are slightly weaker. The dollar is stronger against the euro, weaker against the yen. Gold is up 30 basis points after tacking on nearly 5% last week, seeing its 8th straight weekly gain. WTI crude, on the other hand, is down 1.3%. So this is kind of interesting, right? If crude has been struggling for the past week or so, while gold has ripped. And if you think about what that means in the context of our big picture view of slowing growth but rising inflation, that dynamic actually makes a ton of sense. So let's dive into the charts here. S&P 500 holding the breakout level as the new week begins, right? We've been talking about this 3250 breakpoint for a while. We thought that Friday would be the day to break it out. And so far, so good, right? What's interesting to me is that actually early in the day, it wasn't looking great. I was actually commenting that on a day where the big four crushed earnings, and for the most part, we're trading higher, the S&P was actually trading a little choppy. And then we finally ripped into the end of the day. So we'll see if we can get some follow through here as the new week begins. We're bumping up support, near-term support. 3,100 to 3,200 is a higher support level. We're bumping that up. We're also bumping up the next level, 2,950 to 3,000. Now the level to watch below that for all the same reasons, right? You can see the moving averages are trending higher. Price is trending higher. We've just carved out some higher levels. Resistance in the 3,250 to 3,350 range. We're still there, right? That's kind of, that dynamic remains the same. Here's 3,350, kind of at this gap with eyes towards the February highs. The highs are in play if support holds. So far, that's been the case. Small divergence still in play here as well, but becoming less and less of an impact, if you will, while Chaikin money flow is bullish. So positive development on the heels of those earnings. Now, I truthfully thought we'd see a bigger rip out of the market, the S&P 500, but we didn't. We saw the outperformance on the part of the Qs. We saw the outperformance on the part of growth. That all made sense. I did think that we were going to get a bigger rip. And at one point, I was actually a little bit concerned that we weren't breaking out. But we did close near the highs of the day. Futures pointing to a slightly higher open. So we'll see as we get into another busy week of earnings. Close to 130 names in the S&P scheduled to report this week. Let's dive into the market in a minute now. What are we writing about? Well, the stage is now set for growth to retake the leadership role. That's been a table pounder for us. I never backed off that call. For the entirety of the past couple of weeks, I've called the quote-unquote rotation trade simply position squaring. I do think that's the case. I do think the reports last week were a catalyst. We'll get some more reports this week. Treasuries remain bid as rates remain pinned to the floor. I think an oversold dollar looks poised for a counter trend lift, which would open an opportunity in assets linked to rising inflation. We'll talk about what that means a little bit later on in the show. Futures here point to a mixed open this morning. Let's take a look at the power bar ratio now for the major indices. The Dow tacked on 42 bips, 9 and 9. We're even on the ratio there. S&P 500, 146 to 84 bulls to bears after adding 75 basis points. NASDAQ outperforms by more than 1%, 34 to 6 bulls to bears there. While small caps, your rotation trade, or part of it anyway, we're actually down on the day, down 1%, 570 to 300 bulls to bears there. Bonds, call it a flat day. Tech was your leader on the back of those earnings reports, especially Apple. Huge day for Apple, plus a 4-for-1 stock split. We'll talk about that later. Tech, 21 to 8, bulls to bears. Power bar ratio for large and small cap stocks is bullish. Let's dive into our stock of the day now. Lincoln Electric Holdings, LECO is the ticker symbol here, as it showed up on one of my growth screens. With the potential for growth to overtake value again, reassert its leadership role, I wanted to run a screen of stocks that we classify as growth stocks that meet our criteria for an interesting setup, right? So we have LECO here, LECO, with a bullish rating, strong trend above a rising long-term trend line, and a strong industry group, machinery, strong. What we see here is a personality change as we start to outperform. Rating turned bullish last week. Stock is entering an oversold position based on our proprietary overbought, oversold indicator, while Chaikin money flow is bullish. So I like this setup here. Right? It's flat over the past year. There's no two ways about it, but I like the setup. And it's a differentiated name, probably a name that not a ton of people are talking about it, which is always intriguing to me, right? We talked about Microsoft last week. We could talk about all the fan mags, but where's your value add there? There's no value add to talking about what everybody else is talking about. Here's an interesting name that could potentially play on the reemergence of growth as a leader that probably nobody's talking about. Let's take a look at LECO here as a bullish idea. LECO. It's in my note today, and I'm featuring it here for you. Our industry tracker now and our sector movement. Tech moves back to the top of the list, so all is now right with the world. Interestingly, real estate is up there as well, so kind of an interesting dynamic there. Maybe it's counter trend. Maybe there's something bigger picture. I'll be watching it. You'll see my work tomorrow when we do the sector rotation work. Comms, discretionary staples, Utes, and healthcare, all higher over the last week of trading. And there's your rotation trade back at the bottom of the list. Industrials, fins, materials, and energy back at the bottom of the list. Materials are the group that I like there. I haven't hid that. Within the context of the rotation trade, I don't just say, well, I just want to sell all the cyclicals. No, I have this view on inflation as well. So I want to be looking at the materials. We've talked about that. I've hit the table on that one a few times. Everybody should be pretty clear that I'm not talking in circles here. Everybody should be pretty clear on what my view is. Growth over value in a slowing growth world with exposure to themes that could do well in an environment of rising inflation. That remains the case. I haven't wavered from it in weeks. Our industry in focus now, capital market services. This one's kind of interesting, and we'll talk about why it's interesting in just a moment. It's been a laggard over the past 6 months, lagging the S&P by a little over 6%, but we have this monster power bar ratio, 25 to 6, bulls to bears. Currently ranks it in the top third, number 7 of 21 subsectors, and it's moved down 2 slots over the past week. Federated Hermes, FHI, very bullish. Evercore, EVR, and Cowen, COWN, all with very bullish Chaikin power gauge ratings here. But the fund just can't get out of its own way. It's a bullish rating. That's kind of interesting. Here's the ratio. We talked about it. The trend is strong above the rising long-term trend line. Money flow is dipping bearish, and just no real relative strength. Can't get much traction from a relative perspective, and we're actually going back into slightly, ever so slightly, you have to squint to see it, but it's there, I promise you, starting to underperform again. So a little bit more of a mixed bag than the rating and the power bar ratio would have you to believe. When I see that, I think if you're looking for ideas in the space, I think you have to drill down, take it a step further, find your stocks, do the work, find the interesting stories, right? Do some reading. What do these stocks have going for them? as potential catalysts. That becomes a lot more interesting in a situation like this. Let's look at what's trending now. Friday's movers and shakers, gainers and losers. Apple. Not often that you see a stock with a $1.5 trillion market cap add 10%, but that's what happened. Apple up 10.5% following their earnings announcement. They also announced that they're going to do a 4-for-1 stock split. KSU, chatter about a private equity bid sent that stock higher by over 9.5% on Friday. Stock did catch an upgrade this morning at JP Morgan. Facebook, another monster stock, right? Here are names that we were talking about. Facebook up over 8% on Friday. Church and Dwight, household products name, up 7%. That stock has quietly been an absolute monster over the past couple of years. Church and Dwight, CHD, up 7% following their earnings announcement. PEG, up 6.75% on the heels of their print. On the loser side of the board, remember what I said, we're in the micro market now. It's all, a lot of this is earnings related. Under Armour down on their earnings, Newell down on earnings, FLS earnings on Thursday night. They were Thursday night after the close, so that carried over into Friday's trading. These stocks all trading lower to the tune of 7 or 8%. Win down 5% on Friday, very bearish rating here. And then over the weekend, we got some ugly numbers out of Macau as it relates to gaming data and statistics. So let's watch how Win trades here this week, especially in light of the fact that they are set to report earnings. WRK didn't see anything company specific to drive that one down. So let's dig in. We do our cross asset work on Mondays. Big picture trend across asset classes. Remember the dollar here. We've talked about this. I was bullish dollar and wrong. 100% here and now. We don't remain dogmatic in our views. I had a view on the dollar that I thought that we were going to get a snapback rally off this, kind of initial drawdown in light of the fact, even despite the fact that we were printing money. I thought it was a relative trade. I thought, yes, we're printing, but so is everybody else. So let's gravitate to the dollar. I missed it. I got it wrong. We broke $26 and I reversed course, and that's fine. I think now, though, bigger, and to be perfectly honest, not involved. But bigger picture, what I see here is an oversold condition for the dollar with this nice reversal candle on Friday that maybe sets the stage for a bounce. Trend would still be down 50 below the 200-day, price below both of them. But what I'm interested in is opportunities in my inflation theme that I've been talking about. So what would that set up? We'd love to see the dollar UUP bounce from this oversold condition after this. For those of you who are candlestick patterns, a nice reversal candle here. Open near the low, close near the highs after a downtrend. Maybe an engulfer, if you will. I'm not huge into it, even though I have the CMT. I'm not big into those patterns like that. I'm trend, momentum, and what does it mean? Bounce to 26 on the part of UUP would probably coincide with extended precious metals coming in. This is glitter, GLTR. I love the name. Precious metals basket. So gold, silver, platinum, right? A basket of the metals, which is absolutely ripped as our inflation theme has played out. Check out as the dollar has gone lower, as the government, as the Fed has introduced stimulus, hitting the dollar, leading to inflation, which bids up precious metals. They've become overbought. Look at that scooter, though, 95.7. So we'd love to see a rally in the dollar, hit the metals, providing an opportunity to open or add to the assets that do well in a rising inflation environment, all playing out as investors continue to bid up bonds. Take a look at TLT, continuing to work higher above the moving averages. Now, overbought here in the near term using the 13-period CCI. But for those of you who look at it on a relative basis, let's look at it relative to AGG, kind of a proxy for the bond asset class. You've broken the downtrend line. So investors continue to, even within bonds, there's outperformance. That'll wrap us for today. Have a great day, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.